Okay, good evening, everyone. My name is Patty Evans. I'm the Community Services Director for the City of Goodyear. I want to welcome you. This is our first public forum on foreclosures, and we are so pleased to have such a great crowd here tonight. Thank you very much for being here and being in attendance. I want to first mention how important it has been for our partnership with Credit Union West to help us put on this program. They have been responsible to pull this all together for us, and you're going to get to meet some great people from Credit Union West, as well as the panel that they've been able to put together here for us tonight. I think you're going to enjoy that and learn a lot for sure. Couple of ground rules. Dig into your purse and your back pocket and turn off those cell phones, pagers, and so forth right now. And it kind of helps you stay focused and helps us stay focused up here too. We greatly appreciate that. The restrooms are out in the hallway in front of the front doors as you came in, and there are snacks out there. Feel free to go in and out as you feel necessary. It's quite all right with the speakers and everyone. We're kind of used to that. Lastly, I'd like for you to know that this session is being filmed and taped. Now, as you can see, the cameras are on us here, and we will not up here, and we will not necessarily be turning any of the cameras your way. But if you're here with someone you don't want to be seen with, maybe you ought to keep that in mind. No, really, just want you to know that we're all up here, and the film is this way. But do want to keep that in mind for you, okay? And other than that, I'd just like to say that the City of Goodyear is very serious about what we're doing and trying to help our community, and our department's involved in that. And again, I want to go right on into introducing the folks who've made this possible for us. And first up, I'd like to introduce Ms. Rosie Hargenberger, and she has been extremely important to us. Ms. Hargenberger is the Chief Marketing Officer and also the Membership Officer for Credit Union West. And at this time, I'd like to introduce Ms. Hardenberger.
Good evening, ladies and gentlemen. Can you hear me? Can you hear me okay?
No.
Hello?
There we go.
Better? I'm so high tech. Okay. What's important about being the membership officer for a credit union is that you are the chief consumer advocate for the organization. So let me just tell you why we're here tonight. We're here for you. It's all about you. Credit unions do not have a profit motive. We are a not-for-profit financial cooperative. And here's the really good news. We are one of the strongest financial institutions in America today. Credit Union West. We save together. We borrow from each other. And there's never a profit motive. So I just want to tell you that the folks who are here talking to you tonight are not part of the problem. They are part of your solution. We're here today to bring you plain truth. Some of it isn't going to be so easy to swallow maybe, but we want you to have the truth so that you can decide what your options are. How do you make the best decision for yourself and your family and your future? One of the things we want to convey tonight is hope. There is a life beyond all of this, and we want to make sure that you understand that we're here for the long term. Credit Union West is going on 58 years old. We are the credit union at Luke Air Force Base. We were originally chartered as Luke Federal Credit Union. So when I tell you that we're here to stay, that we're strong, and that we're committed to you and our communities that we serve, I want you to believe that. Please ask all the questions you want tonight. Listen carefully to these panelists. They're very knowledgeable, and they have years and years of experience in dealing with these kinds of issues. So without further ado, I'm going to turn this back to Patty, and I just want you, a couple of important housekeeping. This form, I think most of you did we hand these out when people came in? This is your channel. This is your gateway to follow up counseling and housing information. And here's how this works. Credit Union West has negotiated with Excel GreenPath, who are HUD-certified counselors. It's a HUD-certified organization for housing counseling. Very important that you deal with people who understand the latest and the greatest rules. So what you will do is fill out this financial budget form, basically, and then with a toll-free phone number on the front here, you can call the hours that are provided, and get at least an hour of free counseling, follow-up counseling. After you hear what you're going to hear tonight, you might want to talk to someone. But what's important is you've got to fill out this paperwork first. You've got to be ready so that you don't spend your whole hour digging out paperwork. How much do I pay for utilities? So do your homework first, then call them. They're going to ask you for a code number, and the reason is because they usually only counsel Credit Union West members as part of the free service that we offer to our members. And that number is right here. That is not associated with your name. Ladies and gentlemen, this is totally anonymous. This is just about getting you the help that you need. Now, if you decide that you want additional counseling, you can join the credit union and your counseling will be free. And we have placed here a $5 offer to make the first savings account deposit for you so that you will be an eligible credit union member. So it's free all the way. I don't know what else we could do to make this easier for you. And I think I've covered everything now. Am I good?
I think
everything's good? Okay. So and I'll be here if you have any questions afterwards. My whole team is here, and we are here to serve you, make life a little bit better. Thank you.
Thank you very much. At this time, I'd like to introduce Councilmember Joanne Osborne. If you could come up for us. Councilmember Osborne is here representing our mayor and council this evening.
I'm just going to stand right here. I welcome you to the city of Goodyear. This is actually the council chambers, and that's my seat right there. I wish we were meeting on a better issue this evening, but I'm glad that we're here for you. I'm thankful for our staff and Credit Union West for putting this forum, and I'm hoping that you'll all get some good information to be able to take back. And we're all in this together, and you obviously can tell you're not in this alone. So I welcome you, and I hope that you get some answers tonight.
Thank you, Councilmember. Okay, at this time, I think it's time that we get to meet our panel. First off, I'd like to introduce Rebecca Flanagan. She is a program specialist for HUD, and she's going to address some issues related to HUD and FHA legislation that went into effect on October 1st, what it means and who it will benefit and how. And next we have Dan Alexander, and he is a financial counselor with Excel Green Path Incorporated, and he's going to be speaking with us about budget and credit issues and how to get finances back on track. And then we have Bob Burr, Assistant Vice President of Lending at Credit Union West, and speaking on lenders' options. I want to welcome the panel and thank you very much for everyone being with us.
You're welcome. Thank you.
Okay. And what we have put together for everyone is we've already received some questions, and I'm just going to hold this up now. We had these out front. If you come up with a question during the presentation, go ahead and fill it out, and we're going to pick them up at the very end or towards the end, and then I'll bring them up here and make sure that I cover your question with the panelists, okay? So anytime during the presentation that you think of something, go ahead and write it on here, and we already have a list of questions to go through, so we may address your question before the end of the evening. Is there anything else we need before we get started?
No. Sounds great.
Okay. All righty. This is for Bob or Dan. How soon should I contact my lender if I think I will be unable to make my mortgage payments in the future?
Now, I'm Bob, and that's Dan.
There
We're
you
showing
go.
the order. And I'm the AVP of Lending from Credit Union West. You really want to contact the lender just as soon as you know there may be an issue, and that could be well before you're delinquent on your loan. In fact, lately, I'm part of a real estate task force with the credit union, and we've been getting a lot of calls from our members who still have money in their savings, $8,000, $10,000, but they know down the road they're going to have some issues. So they're contacting us early, and we're working with them. I mean, we take a look at their budget, and we see if a loan modification makes sense, because we don't want them to get to the point where they're going to have to be delinquent. A lot of lenders to this point, and I don't know if anybody's tried contacting your lender, Countrywide, B of A, Chase, whoever it may be, they haven't been very agreeable to work with anybody until you're 60 days delinquent, they typically say, or at least 30 days delinquent. And a good part of that has to do with just the flood of delinquencies that's happening, and they don't have the staff to handle everything. But I think lately you're seeing B of A has announced that they're going to help up to 400,000 homeowners. Chase recently announced it. And they're going to be more agreeable to working with homeowners and doing modifications or forbearances that keep people in their house. But the answer is right away, as soon as you know there might be a problem.
I would definitely agree. You know, as soon as possible. I think the one thing I would add is also as soon as you're prepared, when you go to contact your lender, they're going to want or expect you to know exactly where you're at. What are your finances like each month? Why is it that you expect to be behind or becoming behind in the near future? What has caused you to get behind? And what exactly are you asking for? Are you asking them to change the monthly payment? Are you asking them to rework your loan, like a loan modification? Are you looking to change the interest rate? I think a lot of things that we're seeing as credit counselors, some people have already taken that first step and contacted their lender, which is great, but they've already gone through that process and submitted a lot of paperwork, but they've already been turned down. And it may have been just because they haven't presented accurate information or information that is a good, clear picture of their financial situation and communicated that properly to the lender, or at least in a way that the lender is kind of looking for that financial information that's going to be successful in being able to achieve what it is that you're setting out to do.
Thank you. Dan, I'm behind on my mortgage payments. What are my options?
That's a very good question. And I think that there can be several different options when you're behind on your mortgage. And it really depends on what your circumstances are. When someone comes in and presents that situation to me, the first thing that we're going to do is sit down and perform a financial assessment. I'm going to ask them detailed questions about all of their income and all of their expenses and get a good understanding of what has caused them to get behind on their mortgage payments, and then also understand what all of their other obligations are. So that, and I also want to be able to understand if there are any other resources that they may have, because that's going to play into the other options that you may have to be able to catch up on your mortgage payment. That may also be something that your lender is going to be looking for when you come to them and ask them for help in catching up. A loan modification is a specific option that may be available to you to catch up on the mortgage payments. A forbearance type of an agreement may also be another specific option to help catch up, or the lender may be working with you to catch up your mortgage payments over time. Refinancing a mortgage may also be something that can be helpful, but may not be very common in today's market. So I think we're also going to be discussing some other specific options as we go through our questions today. But would you add anything else, Bob?
Yeah,
or Rebecca?
I would say right now most of the options lie with the lender. When you contact the lender, it's really a voluntary issue right now if they're going to modify or do a forbearance. So you have to work with your lender. There's nothing that the government has issued right now mandating that the lender do anything for the borrower. Having your finances, a clear financial picture when you contact them is key. Another thing would be, beside contacting the lender, is there are personal choices that I think everybody needs to evaluate, and that goes along with contacting the HUD-approved counselor, is looking at your financial picture. Can things be changed on your end to accommodate, whether that be lifestyle changes or taking on an additional job? So there's choices that really come down on your end as well as the lender's end, and on both sides right now it's voluntary, and the lender will work with you to hopefully find common ground.
My only point, of course, Bob also mentioned this, is the fact that we oftentimes refer people to the HUD counseling agencies, HUD certified counseling agencies, and they can help you figure out some of those options. They're going to be realistic with you. They're also going to be your advocate, but you're going to make the ultimate decision of how you want to go, and they can help you to, as Dan was saying, you want to present the best package, so to speak, to them. And for a couple of reasons. One is that, that you are in this position and that you can do this and that. You're willing to work with them as well. The other is the fact that the reality is they're just getting inundated. So the easier, more streamlined, and what they had talked about earlier is as long as if you know what you're going to ask for, that's good too. But we're all not versed in all of this, so it's always good to get expert help, and so we are always telling people to go to HUD certified counseling agencies to try to get that assistance.
If I can't pay my mortgage, can I stop paying other bills associated with my home, like HOA dues, utility bills, or property taxes? Dan?
Yeah, that's a really good question, but it's also a very tough question. I think that the answer would be yes, but there's certainly consequences for that. I don't know that you would necessarily want to do that. I mean, there's when you're struggling with reduced income or no income, you're going to be tempted to say, well, what do I pay? And that's something that we're dealing with on a daily basis, helping you figure out what is the priority. And when it comes down to it, we're always going to, as credit counseling, counselors, we're going to encourage you to pay the priority expenses, things like housing and utilities, transportation, food, medicine, those types of things. So, but if you stop paying HOA dues, for instance, that can have a similar effect as not paying on your mortgage. If you stop paying utilities, you can have your utilities shut off. So, we want to definitely help you get a good game plan for your overall finances. And that's going to be something where we look at all of your resources, all of your expenses, and then be able to work with you on what it is that you'd like to achieve based upon what your circumstances and goals are.
Yeah, we have to be careful here because we're not attorneys, and there are legal consequences for you not to pay some of these bills. And that could be everything from being sued, being garnished, to not being able to get your utilities turned on at another location where you move. So you do want to be careful, and you want to consult with the counselor, and in some cases even with an attorney.
Ditto.
Ditto. We need a couple of definitions. Forbearance.
Well, that's an option that lenders often use to, it can be a number of ways. How I understand it, and you can help me because, like I said, I'm not the one that deals with all the time, but a lender can take, you have your principal and they can reduce your principal, or they can, the payments that you're not able to make, say you're down 3 payments, they can put that to the end of the mortgage towards your principal, and so you're paying over a longer term. And that whole idea is to keep you in your property, but you're going to be paying for a longer period of time, but smaller payments, or forgiving those initial payments that you have missed. Is that, do I have it right? Or
Yeah, that's correct. On a forbearance, typically on a forbearance, you take the delinquent payments and just put them to the end of the loan, and they consider you current at that time. A modification is really when the lender changes the rate, the term, which is number of months, even the balance. Some lenders now are starting to adjust the balance as well, or increase the term. So we're seeing, and I think there's a program, I think Fannie Mae has come out with, where what they're trying to do is get people into a payment that is approximately 38% of your income. So the first thing they do is you call them and they'll stretch the term to 40 years. So let's say stretching the term doesn't quite get you to 38%. Then they begin lowering the interest rate, and I believe they can go down as low as 3%. So it starts coming down by 1/8%, and they keep adjusting the payment until it reaches 38%. Now, if they get down to 3%, stretching the term and going to 3%, and you're still not at 38%, then they may consider lowering the principal balance. And if that still doesn't get you there, there's not a lot of options at that point. There's there's an issue too with the companies. I bet a lot of you, when you're contacting your mortgage company, aren't really talking to the mortgage company. You're probably talking to a servicer, and the servicer doesn't really have authority with that loan. In fact, there oftentimes is not even a lender anymore behind the loan, because your loan has gotten packaged in with a bunch of other loans and sold to investors, and nobody really has an ownership in that loan anymore. So when you do contact your servicer, a lot of times they may not be able to make adjustments on their own. Now what Fannie, though, is offering these servicers is to take a little bit more authority, even though there's investors that own these loans, and they're offering the servicers up to $800 for doing the processing of these modifications. So there's still no direct mandate on any of these, but there's more and more encouragement coming out from the government, from Fannie Mae, to make the modifications. And the big banks, you know, are definitely listening.
Okay, Bob, we're going to let you answer this one too.
Oh.
I have an adjustable rate mortgage and my payment is increasing to a level that I can no longer afford. What options do I have?
It's going to boil down to the lender again. If they can get all your finances and they can determine that there is a payment that you can afford, they can do a number of things. They can lock the rate at a different rate. They can you know, obviously lower the interest rate. They can modify the loan, extend the terms, really everything I just talked about, but that will come from the lender's side. So they will work with you to make what adjustments are necessary. Now, if your payment was going to be $2,000 and you can only afford $1,000, realistically, it's not going to happen. And that's why it's so critical to speak to a counselor to find out what you can afford before you contact the lender. I've seen a lot of people, in fact, the statistic that just came out, there's been tens of thousands of modifications already. 50% of them fail. And that is accurate. You know, we see it even on our modifications on occasion where they fail. But one of the reasons for that high failure rate is people are agreeing to modifications you still can't afford. So if you know you can afford $1,200 and no more than that, a lot of people are tempted if the lender says, you know what, I'll adjust your payment from $2,000 to $1,600. So you're happy about that. I mean, at least it's something, but it's still not what you can afford. Well, that may work for 2 or 3 months, but then you're back in the same boat. So you really need to know what you can afford, and you really need to stick to that when you're working with the lender.
Okay. What is a loan modification and how do I know if I qualify?
I think that's Bob again.
Yeah.
Bob again.
Okay.
He does these things.
Yeah. Pretty. Yeah. Yeah. Well, hopefully we don't have to do too many.
Right.
But no, just what we talked about: modification, changing the interest rate, changing the term, maybe pushing back the payments, lowering the payments temporarily. Some lenders will kind of do a payment reprieve, so they'll lower the payments for a certain period of time, but then possibly adjust the payments, you know, after 3 or 6 months. And a lot of people run in the short-term situation, so it could just be a temporary loss of employment. If it's a longer-term issue, such as the payment adjusted upward $400 and you simply can't afford it, there needs to be a longer-term fix from the lender. But again, a modification, change in term, change in rate, change in payment, change in the principal balance.
Thank you.
If I can add on, as far as the qualification process, I don't know if any one of us would know, but I think Bob had mentioned it earlier, and that is you're not going to know if you qualify for a loan modification until you contact your lender. They have the qualification process. They're looking for a certain set of characteristics about the situation. It could also come down to how far you past due currently, what type of mortgage do you have, what your financial situation is, what caused you to get past due. Those are the types of things that we're helping you assess, you know, within the actual financial assessment, helping coach you, you know, to bring this set of circumstances to your lender and be able to help convince them that it's in their best interest as well to help modify the loan or to help you stay in this home and afford your mortgage payment for the foreseeable future as well. So it can depend on what the lender is looking for to qualify you for a loan modification.
One of the things that Bob mentioned is that now the lenders are beginning to do more loan modifications, and that's a good thing. And we had a panel not too long ago of lenders, and we asked the question, why is this so difficult? And of course, another thing that Bob had mentioned is the fact that a lot of these don't hold the mortgages themselves. They bundle, they sell, they securitize. There's other investors involved. And so to get someone to agree that you as the individual who in that home, to have that investor say, okay, let's go ahead and allow that modification. There's those requirements by them, and if there's a number of them, then those all have to coincide. And so that's been part of the difficulty, but more and more, Chase, Bank of America, they hold a lot of these in their portfolio as well, and those are a lot easier. Fannie Mae is trying to provide incentives. If you have an FHA loan, luckily we don't have as many foreclosed properties, but if you are going in that direction, we do have a center where you can call and say it's our loss mitigation center, and they will give you information, and that is on a sheet that's out in front as well, but they'll give you information of how to talk to your lender as well in terms of those kinds of forbearance, loan modification, getting that terminology down. So, and with our loans with FHA, HUD, FHA, that's pretty much, it's more than, we don't incentivize that, but we do require, in most cases, that they try that first before they come to us for 100% claim, which means that they're going to come to us and they're going to get full mortgage payment. So they're going to turn over and give us the mortgage that you are no longer able to pay, and we're going to give them 100%. So we want them to go through various steps before that happens, and we want you to be able to stay in your home if you have an FHA mortgage.
There's always a silver lining with this big bank bailout where the banks are getting tens of billions of dollars. The government has a lot more say in what the banks do and how they behave. And I think the banks are being more agreeable to modifications because the government expects that they work with their customers and the borrowers. So it's costing us hundreds of billions of dollars, but there's a little bit of a silver lining in that.
And I mean, I can only speak from experience, but being a HUD-approved housing counselor, I've had customers say, well, I've tried to contact my lender on my own, and that experience hasn't gone so well. And then, here we get on the phone together, and it's a completely different experience. That may have something to do with it. It may have something to do with the detailed assessment that we are doing, the ability to be able to understand or navigate some of the different terms involved. So when we get on the phone together and we're saying, okay, here is the situation, and we're looking for a loan modification, or I can explain the background, or we're producing a hardship letter, or all of these different details about your circumstance, that may do the trick, so to speak. Something else I wanted to kind of point out, if you're interested in doing the assessment, Rosie had pointed out earlier about having these different details put together before you do the assessment. Related to your mortgage specifically, being able to pull your mortgage statement, knowing what type of mortgage. Is it a conventional loan? Is it an FHA type of a loan? Conventional loan is probably the most common, but it makes a big difference if it is an FHA loan, or a Fannie Mae or Freddie Mac, or an adjustable rate mortgage, or those types of things. And if we're doing something over the phone, we're not going to be able to tell you, but if you just have some of those details available, we can kind of help you through reading those statements if you're not used to looking at those. But it's going to make a big difference when we do call, because if it's a conventional loan, they may not have the same, how do I want to say, incentive, thank you, as if the loan is actually an FHA type of mortgage. FHA is going to be backing that mortgage if it's with one of the big bank lenders. And if you're behind, they're going to kind of have to answer to FHA. It's in their best interest to make sure that they are working with you. And now if we also have HUD counseling on the phone with them, with you as well, that's just another incentive for them to work with you. And if they're inundated with all these calls, again, it's just kind of helping them help you, so to speak. So I don't know if that helps, but
I think it's easier for them to say yes than to say
Right.
no.
We have a very specific question on related to the modifications that we've been speaking about. Our mortgage company says we do not qualify for modification because we're current with our payments and our interest rate is below 7%. Is that true? Sounds like it falls into the question of all the other incidences that we don't know about yet.
Yeah, it's really lender's choice is what it boils down to. And if the lender feels that they don't want to modify loans that are not delinquent or, you know, below or above a certain percentage, they're not obligated to do so. So it's really like a fire right now. They're trying to put out the hot spots, and that's where they're trying to allocate their resources. Hopefully that changes, and hopefully they will take the time to help prevent people from getting in this situation before they're 30, 60 days delinquent.
Okay, Dan, what happens to my credit rating if I lose my home to foreclosure? And the second part of the question is, how many years does a foreclosure stay on my credit?
if that were to happen, unfortunately, a foreclosure would be a severe negative impact to your credit. It may be comparable to a bankruptcy. It's not a bankruptcy, but it would definitely be a severe negative impact to your credit. And then any negative type of payment history on a credit report does stay on your credit report for up to 7 years.
7 years. Okay. What is a deed in lieu of foreclosure, and how does one facilitate that? Bob?
A deed in lieu is essentially a voluntary repossession. You can think of it like a car where there's the involuntary, or where you voluntarily drive your car in and give it back. It's really the same thing with the house. Instead of making the lender go through the foreclosure process, which is pretty expensive and time-consuming, you make it a little bit easier for the lender by working with the lender and signing the deed over to the lender. And it does make a difference. In my opinion, when I see that it was a deed in lieu and not a foreclosure, that indicates to me that that person worked with the lender and they did all they could and it just didn't work out and they gave the house back. Now in a foreclosure, it usually indicates to me that the individual wasn't working with the lender, that it became more difficult, and the lender does, the lenders aren't making money on foreclosures, so if they have to add another $5,000 or $7,000 to their balance to actually get the home, it makes it much more expensive for everybody.
Dan, this is another one for you. Other than my credit, does a foreclosure affect other areas of my life, like my ability to seek employment or how much I pay for insurance?
I think indirectly. I know it says other than credit, but it definitely it affects it can affect your life indirectly through credit. Like, for instance, how much you pay for insurance. Well, we had talked about a moment ago, foreclosure, if there is a foreclosure on your record, it's definitely going to impact your credit. So your insurance rates can go up, since some insurance companies are looking at your credit score to be able to adjust your rates. So as far as seeking employment, I'm not aware of that. When you compare that to, like, if you were to file for bankruptcy, well, there are certain types of employment that would look on your credit report and preclude you from a particular type of employment if you were to have filed for bankruptcy. Is there something that says, well, if you have a foreclosure on your record, then you can't apply for this job or have this position? That's not something that I'm aware of. So I think indirectly is probably the answer.
Oftentimes financial institutions, will not hire based on credit. Other cash handling type jobs won't hire based on credit.
Of course, I'm most experienced with the federal government. We don't have that requirement. We as employees, we do have to follow a code of conduct, and one of the things is that you try to pay your bills on time, but that doesn't preclude you from, you can have an explanation for that, doesn't preclude you from getting a job with the federal government.
Is there anything, Rebecca, that you can think of as far as like seeking other types of housing, like apartments or those types of things? Because I was trying to think of, other than credit, how a foreclosure might, if somebody were to be seeking, you know,
Well, even
an apartment.
rentals.
Right,
I
right.
think people look at, more and more people are looking at your credit, and they will ask those questions. And I think we're in the position right now, there's so many people that are having to go into foreclosure that where else do you live, but so that they're going to have to make some concessions with that. But I think you would be asked those kinds of questions if it comes up on your credit report that you have, you know, your home has been foreclosed when you're trying to rent something else.
So not specific to a foreclosure. Just because you have a foreclosure doesn't mean that you're not going to be able to apply for an apartment per se. I mean, personally, I know that there could be other things on your credit report that they could be looking at payment history or your overall credit and payment history for that. And that's something that we can help with as well, just from a credit standpoint. So I don't know if you have any questions on that we could answer or address later, but hopefully that answer
Okay.
didn't address the question.
Thank you.
So,
Who knows that I'm being foreclosed on? It's a question for Bob.
It's actually a matter of public record. So when the foreclosure is initiated, it's filed with the county. And usually your neighbor's not in there looking to see who's being foreclosed on, but it's tracked by attorneys and other organizations to track foreclosure rates. So it is a matter of public record if somebody really wanted to know.
Well, in fact, that's how some of the folks that you don't want to find you will find you, and
Yes.
those are what we call the scammers that try to tell you that I can keep you from going into foreclosure, or give me $800 or whatever, and I'll be able to fix your credit, and all of those kinds of things. You have to be well, one, you shouldn't do that over the phone, and I would seek counseling right away. We refer people to housing counselors. We tell them do not sign anything unless you understand, and a lot of these things you do not have to pay for to have them accomplished.
That there is nobody out there that charges a fee that can do anything that you can't do yourself through a counselor. They really are scams, because if they contact your lender, they're just negotiating. And there's no obligation for the lender to do anything for them. In fact, a lot of lenders won't even talk to them. They want to talk directly to the borrower. So if you're being offered any of that, they can help you, they can save your home. To me, they're all scams. So I wouldn't listen to any of them.
and that is why that I phrase, when I think there's another question that comes a little bit later is, you know, will a HUD-approved counseling agency contact your lender? We typically contact your lender together. We will set up a conference call so that you are on the phone at the same time. As a matter of fact, a lender will ask for your
The counselors
authorization.
are not scams, and generally they're free. So
Right. That we don't charge any fees
That's
to be
right.
able to do an assessment. We don't charge fees to contact your lender to be able to talk about loan modifications, forbearances, any of these different types of options. And I just wanted to kind of clarify that we're not going to call your lender for you. We're going to be calling your lender with you. And they're going to need your authorization because of that.
And it's a big difference because when it's a HUD-approved certified counselor, then the lender's going to respect that. They know what's required of these counselors, what they have to go through before even contacting the lender. So versus paying somebody $800 and having them go on your side and you know they're not approved for anything, having a certified counselor call with you goes a long way as well. And the lender is much more likely to believe the scenario of your income situation when they know a certified counselor has done the due diligence already.
Okay. Rebecca, do I have to leave my home when I'm notified that I'm being foreclosed on?
Not necessarily, and that's because it is a process. You will probably get notification. The minimum amount of time it takes in the state of Arizona to go through the foreclosure is 90 days. The other thing is that there's a lot of backlog that's going on as well. And then the other thing to keep in mind is that if you vacate the property before it does go into foreclosure, you're going to kind of lose some of the options that might be available to you, like forbearance and loan modification and those kinds of things. So best thing to do is, once again, try to contact a HUD, Certified Housing Counseling Agency, right away, and just see what you can work out.
Yeah, I mentioned earlier about the deed in lieu and how to a lender it could look better than a foreclosure. But just because the foreclosure process starts doesn't mean you should sign a deed in lieu. I mean, you're still trying to save your home. You should contact that lender. You should contact the certified counselor, and you should do everything you can to try to save your home. A deed in lieu is more of when all options have failed. In my opinion as a lender, it's better to give the home back than to force it all the way through the process.
Along these same lines, do you have to file bankruptcy with foreclosures on investment properties? And I don't know who to direct.
That's
that
more
to.
of a legal question.
Okay.
That
I don't know the answer.
Don't know
to
that one?
either.
Okay.
I'd be.
We can save that question.
Yes.
Okay.
I'd have an opinion, but I think it's more dangerous to us to do that.
Okay. We won't go there. Okay. Rebecca, how long does the process take once the lender has notified me that the foreclosure process is underway?
Well, as I mentioned before, that in Arizona, the minimum amount of time is 90 days. But I think we're seeing that taking a little bit longer because they're backlogged to do this process. So,
Okay. And Bob, this one is for you. What is a short sale, and how could this help me? And are there repercussions?
That's ironic. I was just going to mention short sales as one of the options. Short sale essentially is when you've worked with your lender and they've agreed to take an amount less than the principal if you sell the home. And that's becoming more and more popular. And if you look at the home sales in the market right now, a lot of them are foreclosures, but a lot of them are short sales. And to the lender, typically they can get more than they could have if they own the home. As soon as a property is owned by the bank and you're looking to buy a home, you just expect that you're going to get a smoking deal. So there's no chance that a bank can sell it for as much as the homeowner themselves. And if you're going to do a short sale, typically the buyer expects a little bit more of a deal, but they're not looking for the type of deal they would get if it was actually foreclosed on. So the bank gets a little bit more than if they actually own the property and they save on all the foreclosure costs. So it can really work out to be a win-win if the lender is willing to do that. And that's assuming that you've exhausted all the other options with the lender to try to save the house.
If I'm ever foreclosed on, would I be able to buy another home? And then also, will the previous foreclosure be held against me? Rebecca?
Well, the good news is, yes, you would be able to buy a home, but you won't be able to buy one right away, and you probably wouldn't want to anyway. Trying to heal your credit is something that's pretty important. You could qualify for an FHA loan within in 3 years.
And it's probably FHA that would be the lender that would approve you. Most conventional lenders would be a longer time period. And in today's market, I think lenders are being tighter and tighter with the credit. But FHA is a great option to go to. But with the foreclosure would impact the rate as well, probably even, yes. Mm-hmm. So it will impact rate.
Okay, Rebecca, where can I get free counseling assistance to help me sort out my situation and work through with my lender?
Well, what I did is I left lots of information out there. One is the HUD-approved housing counseling agencies. I'm going to give you the number in a minute, but it is out there as well. And then I also left a list of the various nonprofits, government entities. It's a sheet that's called Current Foreclosure Prevention Resources, also a wealth of information. But the number for finding a HUD or contacting a HUD certified housing counseling agency is 1-800-569-4287. One of the things that I mentioned, there's an alliance with lenders, and that is Hope Now line. And what they do is that they'll refer you to a HUD counseling agency as well. And that number is 1-888-995-HOPE, HOPE. And then the state of Arizona, the governor established a line also, which gets you about to the same place, but you will, I think it's a little bit faster because you'll go directly to a housing counselor in Arizona without going through some of the other questions that will be asked on the Hope line. But that number is 1-877-448-1211. And as I mentioned, all that information is out there. If you don't find the sheet and you haven't written it down, I'll be happy to stick around and give you that as well. The other place to find that information, if you have a computer, you can go to www.hud.gov. Right there on the front page, it talks about housing counseling, and you can go to that. You will then put in there the state of Arizona, and then it'll give you the list of the housing counseling agencies that are certified and can help you.
It's a great piece of information for tonight. We want to be sure you get that, so we'll go over that again towards the end, get you those numbers. Okay, Bob, what happens to my second mortgage if I'm forced to foreclose on my home?
Well, when the first mortgage lender begins foreclosure, the second mortgage lender basically has one option, and that's actually two options. The second lender can bring the first mortgage current to keep it out of foreclosure, or they can attend the sheriff's sale and actually purchase a home. In today's market, there isn't enough equity. Most second mortgage lenders are just letting the house be foreclosed and go to the first lender. If the house is in foreclosure and it goes to the first mortgage lender, the second is wiped out. There's nothing left there. And so with the equity in a lot of the houses right now, that's the option that a lot of second mortgage lenders are taking, is to just liquidate their balance.
Thank you. This question's open to anyone of the panel. Are there any tax consequences to a short sale?
Right now, there aren't. Historically, whether it be a signature loan, whether it be an auto loan, whether it be a house, if the lender forgives any portion of that, that's considered income and would be taxable. But in 2007, President Bush signed the Debt Relief Act of 2007 that runs through the end of this year, and there's probably a good chance that it might even be renewed. So if any of your debt is forgiven, and I believe it's just real estate debt, that there would be no tax consequences on that.
Mm-hmm. That's what I understand. And of course, to be really sure, because these things change and are changing rapidly, is to make sure you talk to you can call the IRS, or you can contact a tax preparer. They usually can find that information for you, but that is the latest.
The only thing I would add is also because certain types of second mortgages, home equity lines of credit, those types of things, I've heard some instances where if you use a home equity line of credit for other than, real estate, home improvements and those types of things, like if you use the home equity line of credit to pay off credit card debt or those types of things, that might be something that may not fall under that, so you definitely may want to consult a tax advisor.
Okay. That was speaking about the short sale. How about, are there any tax consequences to having my home foreclosed on?
That would be the same. There wouldn't be, talk to a tax advisor, but as far as I understand, no tax consequences.
Okay. Rebecca, what is the subprime mortgage?
Well, subprime, you hear it referred to as B paper, which means it usually is a product that is provided to individuals with what we call less than perfect credit. And so it has a higher interest rate, and there are lots of people who unfortunately get into subprime loans who would very much be able to qualify for prime loans, which mean that would be at a lower interest rate. But for some, well, I know what the reasons are. The reasons is that many of the individuals, some of the loan officers, of course, make more money if they, of course, give you a loan at a higher interest rate and that kind of thing. So that's kind of been our experience. We are not a subprime lender. HUD is not, or FHA is not a subprime lender. But we do know that a lot of the people that have gotten into adjustables or the higher rates, or the 100% no down payment, those kinds of more creative products, those have been the experience where you end up paying a very higher rate, or also a balloon payment, which means you have to pay a certain amount after a certain amount of time, and a prepayment penalty. So all of these terms that you hear, those are all associated with subprime loans.
Mortgage brokers are much like car dealers' finance managers. When you go in to buy a car and you have to go and fill out your application and speak to the finance manager, they work with a number of different lenders. And those lenders will offer the dealer an incentive to get that contract. The lenders pay the dealer based on sometimes the rate that they get. So if the dealer, let's say the lender approves you at 5% and the dealer sells it to you at 6% on your car loan, based on that 1% markup, the lender will pay the dealer a certain amount of money. It's the same thing with the mortgage brokers. They can, and just like the car dealer, they can get you an extremely good deal, sometimes even better than you could get on your own. But you have to be careful, and you have to shop, and you have to know what the rates are and the fees before you go to the broker, and you have to know what's out in the market. Same thing next time you go buy a car. Know what the rates are out there, and just understand that the finance manager is looking out more for their best interests than your interests, just like, unfortunately, some of the mortgage brokers were doing.
Dan, you talked to us a little bit earlier about a credit counselor and what they do. Could you say a little more about that? Will they make our phone call on our behalf? Do they speak directly to my lender? How does that happen?
Sure.
How does that work?
Just the process of that, or just kind of the overall role of a credit counselor?
Yes, just kind of,
Sure.
How does that work? We're talking about free help here. How does that work for us?
Mm-hmm. Yeah, I think just to summarize, the role of a credit counselor would be starting at understanding your circumstances and what your goals are. Going from that to understanding what your finances are like. And we try to put that maybe into a monthly basis. What's your financial position, income and expenses, and maybe also what your assets are like, if you have any investments or savings or other property, those kind of things. And then maybe a third part would then be, what are your options? If these are your goals and your finances, then what are your options in your circumstances? How do you want to be able to address your current situation? From there, we also have a couple other different roles, and that is implementing a couple of different options. If it's related to housing, then it could be contacting your lender, picking up the phone, contacting them, understanding what types of options would be there, maybe giving you sample hardship type letters, reviewing a hardship letter with you, understanding different documentation that you have received from your lenders, maybe proofreading a letter that you have to be able to send to the lender itself. Also, potentially putting together a debt management type program. That would be a different option that we haven't really brought up today, but credit counseling agencies like ours can implement a debt management program where it can consolidate different bills. Maybe one of your issues that you're struggling with is that you're, let's say, out of work for a while, or your income has decreased for a while, and so you've relied on maybe some different types of income or supplemented income from, say, credit cards for a while. And so those balances have gone up, your minimum payments have gone up, maybe your interest rates have gone up, and so that's kind of a big driving issue, not necessarily the mortgage. So if we were able to work out better payment arrangements with your credit card type debt, that could be a potential solution. And so we discussed that as a possible option as well. If that's not an option, what other types of options are there? We have another role of educating you. There are a lot of other types of advertisements out there about other types of consolidation, like settlements, which that's not really a consolidation of like a debt management, but it's something that you go out to negotiate with your creditors. And there's pros and cons of that type of option as well. So really, it's understanding your entire situation, understanding what types of options you would have available to you, understanding the pros and cons of them, and helping you make the best solution for your situation.
Dan, if I were married, would my spouse's credit affect my credit? How does that work for me? How heavily impacted am I if my husband had bad credit?
Like if you had a mortgage involved, or just any other types of debts?
In relation to the foreclosure, yes.
Okay, so
yes.
yeah, it would depend on if both of you were on the mortgage. So I guess if the question is, if you had a mortgage and you had a foreclosure, would both of your credits, both spouses' credits, be damaged or equally damaged? And the answer would be, well, if both of your names are on that mortgage, then yes. Sometimes you only have one spouse that their name is on the mortgage, and therefore then only that spouse's credit would be then impacted. The other person or the other spouse would not.
Perfect. That's what I needed. Rebecca? I've heard that there are scams out there where they say they'll help you save your home, but then you lose it and you're even in worse shape. What should we watch for, and how can we avoid a scam? I know we talked about that just earlier on, but let's kind of go back through that again.
Well, I think one of the rules of thumb, do not sign anything you do not understand. If you don't understand it, stop, take the time, have somebody review it that you trust, and then over and over again, I'll say, you can go to a HUD, certified approved housing counseling counselor agency. They will help you. They will be your advocate. They will go through the paperwork with you. And the other thing that we mentioned earlier is there is no one out there that you can pay $800 to and they will, make this all go away. It's just not going to happen. So I suggest you either call the lender yourself or go to a housing counseling agency.
We're so fortunate that you're available to us because it's just so true to call the counselors first. Rebecca, one more. What are the steps to a foreclosure from receiving a notice until the time a foreclosed home is auctioned off?
Okay. In the state of Arizona, notice of default, as I mentioned to you, it's a 90-day process, but the first step is a notice of default is issued, and that's where it becomes public, and that's where you might get those calls that we talked about earlier and approached by people with kind of unethical motives, and you have to be careful of that. There is not going to be anyone that can make this all go away unless you go through, the process with a counselor or you have it, you talk to the lender as well. It has to be published for a period of time. That's the other, and that's why I talked about the 90 days. And there are business journals that kind of specialize in this, so that's where that will be advertised. And the reason for that is that it allows those who have junior liens on the property to come forward and indicate that they are a creditor that wants to be considered in the foreclosure process. And as I said, it takes about 90 days at a minimum to go through that process.
Thank you. What recourse, Rebecca, do renters have if the home they've rented goes into foreclosure, and are there agencies that will help the renter?
Just recently, I don't know if you saw in the newspaper that Fannie Mae and a lot of these foreclosures for apartment complexes or for single-family homes are conventional mortgages, which mean that they are Fannie Mae loans as well. Well, Fannie Mae recently put out a notification that they would then allow the renter to stay in the home, allow the homeowner to stay in the home as a renter, and work that out with them until, of course, they are able to either purchase back the home or the house is sold. And that we have also done that kind of thing when it's been an FHA loan as well. We call that occupied conveyance, where the lender we will allow the lender to give us the house back, in essence, with individuals in it, and those individuals are then paying rent along the way. In terms of any rights, unfortunately, no. It's the contract or the mortgage is between whatever the mortgage company is, the bank, the lender, and the individual homeowner. So, but I would still try to get some advice. There's, like I said, there's a whole lot of people. Arizona lawyers are looking into all of these kinds of options, but because you are not a party to that contract as a renter, you really don't have the same kind of rights that the homeowner does.
You may have something in your lease agreement that you would have recourse against the landlord because they broke it out of the lease agreement. So you could have legal recourse in that regard. The other thing is that landlords who take the rent and don't make the mortgage payment is technically illegal. And not that the DAs are probably looking to prosecute a lot of those, but it is illegal. So they're supposed to be taking the rent and making the mortgage payment. Now, in a lot of cases, the rent payment is actually quite a bit smaller than the mortgage payment. So that's not helping in a lot of cases for the landlord.
At this time, I want to be sure that if you have some questions from the audience, we had passed these forms out a little earlier. If you would pass them to the edge of the aisle, I've got a couple of folks that can pick them up, and we'll bring those up to the forefront. Just kind of raise them in the air if you would. Doing okay? Time-wise? You all right? I've got one more question here, and then whatever we get from the audience.
Okay, great.
Still have lots of questions.
Yeah?
You know, I'd like to go over those free counseling numbers again, Rebecca.
Sure,
Do you want to do that? And then I'll get these questions organized.
Okay, HUD-approved housing counseling agency, 1-800-569-4287. Hope Now line, 1-888-995-HOPE. I should have deciphered that for you. And then the Arizona line is 1-877-448-1211.
Okay. This question is for Dan or Bob. I have a loan that pays only the interest and none on the principal, and I'm not currently behind, but I'm afraid of what the future holds when my rate goes up. What can I do now before this happens?
Kind of goes back to the first couple questions, which is to contact your lender, contact your HUD-approved counselor, and it's going to be up to the lender again to make a determination. In most cases, when the ARMs are going up and the borrower can't afford it, the most common thing that the lender is doing right now is to lock the rate. So that they might do it, say, lock the rate for a 3-year period or a 5-year period. Typically, they're not locking it for the remainder of the term, but they're trying to give some relief by locking in the lower rate for a period of time.
Can you tell us what an ARM is?
It's an adjustable rate mortgage, and it can be adjustable by all sorts of period of time. What we saw probably the most common, a lot of the mortgages that got borrowers into trouble were 2 or 3 year ARMs that were not only ARMs, but they were negative amortization loans. So the borrower wasn't even paying the amount of the interest that was due. So the balance was going up. And then, because let's say it's a 2-year ARM, and this is where the lenders really got some people, it might be a 2-year adjustable, so in 2 years your loan is about to adjust and you want to maybe refinance. Well, as part of the agreement, there was a 3-year prepayment penalty. So now they have you kind of going both ways. So you have to refinance so your rate doesn't go up that much, but if you do refinance, you're going to have to pay a prepayment penalty. And those were called 228 mortgages, and those are the type that, I don't know if they've legally been banned, but lenders have been told not to do them anymore.
Well, one other thing about ARMs, the adjustable rate mortgages, one of the things that they were, some lenders were doing is that they were qualifying you at the lowest interest rate and not considering could you qualify to pay that mortgage at the higher interest rate. And that's where a lot of people got into trouble. FHA doesn't have that kind of, we require that, we're a little stricter, I guess, on some fronts, but we require that And we do have adjustable rate mortgages, but we require that the individual qualify at the highest rate as well.
And not all ARM loans are bad. ARMs go back decades.
Right.
And there's the most conventional are 3-year, 5-year, 7-year ARMs. I think a lot of homeowners took the 228 because it allowed them to get into the house, and they felt that in 2 years or 3 years their financial situation would be such that they could refinance and be able to afford the new payment. And I think there were some people that were buying a home in a hot market thinking that in 2 or 3 years that they'd be able to sell it and they wouldn't be worried about the payment adjusting and going up. And unfortunately, with the environment, with home prices, home values plunging, that's not an option.
I'm going to open these questions up to the panel, and you jump in when you're ready. Is a VA loan easier to refinance than a conventional loan?
If you already have a VA loan, typically it depends if you're trying to take cash out, but if it's a straight refinance, no cash out, it's very easy to do. It's a streamlined type of loan and is much simpler than getting any other type of loan.
I wanted to mention that I have the phone number for the Veterans Administration's financial counselors, and that one is 1-877-827-3702. So if you have a VA loan and you would like to talk to one of the VA counselors, you can call and they will talk to you.
This is a great group for questions. We have a lot of questions. I like this. How do we rent our house out through HUD?
Well, all of our rental assistance is done through what we refer to as housing authorities or housing departments. And we have a number of them. I don't believe Goodyear is one of them, but Maricopa County, for instance, I'll use that one as an example. What you would do is you would go and tell them that you're interested in having your home occupied by someone who has rental assistance or Section 8, and they'll have you go through an orientation and pretty much meet the qualifications. There are a number of things, so I'm not going to go through all of that, but for each area it's a little bit different because of course they're trying to have the rents comparable for that particular neighborhood. And so that's what you would have to do. You would have to check with a housing authority, is what we refer to that as, because HUD provides the financing to them. And we have 25 in the state of Arizona. For instance, Peoria has a housing authority, City of Phoenix, of course. And so if you have a particular interest in a particular area, I can let you know, and you can go to the HUD website and also get that information about each one of the housing authorities that are operating in Arizona.
Okay. I'm trying to pick where to go next here. Okay. Property taxes on my house went from $1,100 in 2008 to $2,930 in 2009. At the same time, the TPV changed from $315,000 to $225,000. So my escrow went up, causing my monthly payment to be unaffordable to me. Is there something wrong?
I'm not sure. So the value of the property was assessed lower, but the taxes tripled. It seems like there's something unique in that situation, maybe a special bond or assessment, or...
I think the tax assessment, it lags. So the tax assessment may have gone up, even though, it's based upon a prior yearly value.
Yeah, if it's a brand new community that just got built out, it's possible, especially if it was assessed at land value and now there's a house on it. And
That can be it too.
But typically in most neighborhoods, the value's coming down, and so is the tax rate. But the tax rate, the government can adjust it so that you're paying more per thousand, so you end up paying just as much even though the value's coming down. And likewise, I know in Glendale, I think they actually lowered it per thousand so that when values were going through the roof, that people wouldn't be kind of penalized for that and see their property taxes go through the roof. So there's a lot of manipulation that can be done with the taxes. But to have the value go down and triple is kind of something unique there. And I would probably start out by going to the county tax assessor and having them clarify that with you.
Because there might be a special assessment that kicks in at a certain period of time, but what they mentioned, usually the assessments lag. This happened to my son. He moved, it was a brand new community, he moved in, and of course he didn't realize that his taxes were based on just the land, and so of course the year later, his mortgage payment went up about $200. This is a first-time home buyer, and $200 a month is a lot of money for a young first-time home buyer. Fortunately, he had someone that could help him, and we did for about a year, but we did find out that so many of the homes in that particular subdivision, which were for first-time home buyers and newly developed, ended up having to sell their house or going into foreclosure. So a lot of times that happens.
Just on an interesting kind of personal side note, you have, I believe, until April 30th to appeal your property taxes and the valuation of your house. Last year I missed it, and I tried doing it in May. I didn't realize there was a deadline. They said I couldn't do it. I'd have to go to court. So it cost like $120, so I did go to court, and that's quite an experience. But I went before the judge, and they actually had the tax assessor show up. They didn't send an attorney, and they based their property value on what happened in the last 2 years. So because the last 2 years were really good, they felt that this year is what they should charge me on my taxes. But one of the things, and I printed off the assessor's website as far as what they do to determine, and if you want to appeal, one of the things you do if you want to appeal is bring a recent appraisal. So I asked the judge, why, if it's based on the last 2 years, why would the appeals require a recent appraisal when that has absolutely nothing to do with the valuation? And he looked at the tax assessor and said, why would they want that? And I won. So it was kind of interesting. So you can win when you go for a tax appeal.
Okay. I'm a military and must move in 9 months. I bought my home with an 80-15-5 2 years ago, and now I'm approximately $60,000 upside down. I'm currently on my payments, and everything I've read leads me to believe I would not be eligible for modification. I could potentially rent at a $600 a month loss, but I couldn't absorb that for too long. What are the pros and cons of a short sale or just walking out? Are there other options I have not thought of?
His rate is going up? Is that
No, he's able
I'm
to make
current
the
on my
payments,
payments,
current
and
on
everything I
payments.
read leads me
Everything's
to
going
believe,
up.
yeah,
He's
they're
leaving
going
in
up.
9 months.
but the rent is going to be less?
Right.
It's a tough one.
Yeah, other than the options we already discussed, I think a short sale probably does make sense. It probably is more beneficial for your credit to try to do the short sale before either walking away or forcing the lender to go into foreclosure on it.
As far as if it is an adjustable rate, which is partly not the question, but and to prevent it from going up in the future, if you were to be able to swing it, maybe the Soldiers and Sailors Act might qualify to keep the payment itself from going up in the future, and then it just depends on your overall budget. But then, as far as the question of the pros and the cons of the short sale, again, the short sale is going to be better on your credit report in the long run because, again, it's showing cooperation with your lender as opposed to just kind of walking away from it.
And I'm sorry, this was military?
Yes.
There actually was a change. I don't know the exact revision, but there was a revision to the Soldiers and Sailors Relief Act, although now it's called the Service Members Relief Act, I think. And it does address foreclosures. And you'll probably want to get with somebody if this is Luke, they have a financial counseling office, and talk to them about those changes because there's some changes that prevent a foreclosure on a military person.
You may have a family services center that may be a little more familiar with the act itself, and that can direct you on that particular benefit.
Can
I was just going to chime in to say that if it's at Luke, by chance, I know that the credit union has done a number of sessions over there, and so you can get really good information. I just have, on a personal note, if you're able to stay current, you have to have a place to live. So I would try to, stay in until, you can't, and then think about doing the short sale. Talk to your lender, talk to a counseling agency. But walking away is probably the absolute last resort.
The short sale itself, I mean, how you present that short sale. I mean, I think the key also there is how you write a hardship letter. I mean, the circumstances are kind of self-evident there, but how you present that to the lender, I think some circumstances are usually pretty obvious, and I think lenders then are a lot more workable with you, or they work with you a whole lot easier, especially, I mean, if you work with a realtor, I mean, they base the price on the market rate. I mean, you put it up on the market. I mean, typically short sales, by the way, need to be on the market for 60 to 90 days to show that you are really trying to sell the home, those types of things. So, again, get that letter to the lender, communicate your intentions right away. If we need help, I have a sample letter for specific to short sales, and then contact that lender right away. And then also the other, Family Services Center, maybe even the VA loans hotline might be able to be another resource for you. So,
Okay. Bob, I think this might be yours. Can I use the Excel HUD counseling without being a member of the credit union, at Credit Union West? So I guess it's really two questions. Can I use Excel, and can I use HUD counseling?
Yeah, I'm trying to remember exactly what Rosie said at the beginning, but we
Rosie,
are attaching.
come back.
I can answer that.
Can you? Okay.
Yeah, I mean, the first session, if you want to call, it's the code, whatever the form that you have, is absolutely free. You just simply need to present the code that is on your sheet. There is no charge for the counseling session. That's an hour long. If you wanted additional sessions, then I believe that it was becoming a Excel or a Credit Union West member.
Which only takes $5, and I believe you have the certificate to actually cover that.
Okay, does credit counseling affect my credit report? Is it reported if credit cards are reduced or the rates or balances negotiated?
Can you repeat it real quick?
I sure will. Does credit counseling affect my credit report? Is it reported if credit cards are reduced or the rates or balance changed?
Yeah, very common question. I would answer that this way. It depends on what your credit score is now. If you were to have an excellent credit score, yes, there are some things that may impact your credit score. If you have a poor credit score, then credit counseling or a debt management program can also impact your credit score positively as well. So there are a couple of those factors would be closing accounts, on-time payments. Those two types of things could be negative impacts. If you have negative credit scores currently, then actually a program of that nature could actually be improving your credit score in the near future, because you're starting to pay on time and you're paying your balances down in the future as well. As far as notations on your credit report, it really is up to the creditor. The creditor can make a notation on your credit report for each one of the accounts. It would be stating something like participating on that type of a program, but that notation in and of itself has nothing to do with your credit score.
Okay. In order to request a loan modification, do I have to be currently living in the home?
Generally, yes. It's very rare that a lender is going to do a modification for an investment property, and that's what they consider it if you're not living in the house.
Right, and I mentioned that not to vacate, if you could at all possibly not vacate, even if you get a notice of default, so that you can have those options, loan modification, forbearance, those kinds of things.
I believe the specific question that I have heard is this property owner occupied? I don't believe that the loan modification specifically is precluded if it's an investment property, but I think it depends on a case-by-case basis and the lender. But yeah, I think investment properties, a lender is less likely to do a loan modification. So,
Okay. In the event of a short sale, deed in lieu, foreclosure, or a foreclosure, will the lien holder sue you? Can they recover more than the property?
In the case of the first mortgage, I'm pretty sure the answer is no. I'm not an attorney. But with the second lien holder, there could be circumstances when the second lien holder, depends how the money was used, et cetera. Generally not, but that's where you'd want to speak to an attorney on that. But maybe Rebecca, correct me if I'm wrong, but I'm pretty sure first mortgages.
That's the only one that I know for sure, that you cannot be sued for that, but I am not sure about the others either.
yeah, I would say in general, because we're not attorneys, I would say if you're really concerned about that, it would be wise to consult an attorney. The deficiency balance is what you're wanting to ask about, and you know, it's going to be a state by state because we do counseling across the country. Each state is different, and so Arizona has state laws related to that deficiency balance. So that's what your question is going to be to an attorney. So,
Okay. I have a foreclosure scheduled for April. Could I negotiate with my lender? I already have the notice of foreclosure as of last month.
Yes.
Absolutely.
Yes, call the lender. We're hoping that the lenders, as we talked about, at first the lenders, you know, wanted to kind of weigh their options, and there were lots of issues that they said they had, why they couldn't modify loans, why they were going to go through the foreclosure process, but it's a very costly process for the lenders as well. So if you can, you know, talk to them, do a loan modification, forbearance, they'll accept that. You know, it's worth, you know, the call. Or also, once again, going to a counseling agency. And they'll make that call with you.
Okay. Does a conventional loan with a second have the same options as FHA in regards to the government assistance?
as far as government assistance,
I don't know what the government assistance is. Meaning, I'm not quite sure of the question, but the difference with the government loan or the FHA loan, and I'm not going to speak about the VA loan, but the FHA loan is insured by the government, and therefore, one, the lender has to go through various loan loss mitigation process before we would then allow them to make a claim, because it's essentially an insurance company. So they're going to make a claim that that mortgage has gone into foreclosure. We are going to make them whole. On the conventional side, maybe you gentlemen know more about that.
Now, it was regarding assistance, correct? As far as is there...
In regards to government assistance, it says, does a conventional loan with a second have the same options as an FHA in regards to government assistance?
What I was thinking government assistance was, and I wasn't sure, was that loss mitigation process or the loan modification. Is that available?
Yeah, I mean, the government, it's a private sector, so really the lenders are determining lender by lender what their actions are as far as any type of assistance they might give, so there's nothing regulated there. As far as assistance for government, FHA and that's, you're the expert there.
Right. And once again, the lenders are required, before we allow them to make a claim, they must go through a loan loss mitigation process, which means that they demonstrate to us that they have worked with the homeowner as much as possible, but there is no other recourse, and therefore they need to foreclose.
So
that is not right.
So the short answer is probably no.
Okay.
I don't always
Rebecca?
like to say that.
Yeah. Rebecca, this I think is for you. It's kind of a multi-phase question here. Can you tell me more about the FHA option to lease my home? What's the name of this? And can I buy my home back later? And who can I call to initiate the process?
Well, I think if the question is, you have a home that you are going to vacate, and you want to lease that under a HUD program, which would be Section 8. And as I indicated, you would need to get in touch with one of our housing authorities, and like I said, the list is on our website, www.hud.gov. They will have you fill out some paperwork. You'll need to tell them, it has to, the property has to meet certain standards. What other kinds of things can I tell you? And also, you would only be able to charge a certain amount of rent. What the housing authority will do is that they will pay the difference. The individual that's living in the house will pay up to 30%. HUD will pay the difference up to a certain amount. So those are the kinds of things that not HUD, I'm saying the housing authority with HUD funding will do that. In terms of buying back your property, well, once the lease has, that's what I don't understand, because you're not really selling your property at that point. You are just holding on to your property, leasing it out, and you are still on the mortgage. So I hope that's answering that question. Or are you talking about maybe a lease option to buy?
You had mentioned, I think, earlier about where they can stay in the home, but rent it, I think, and then
No, that
buy
was,
back.
no, that's if they're staying in the home, and they can rent it. Can they buy it back? Is that the one? Yeah,
Yeah,
the
it's
occupied
okay.
conveyance. They would have to, not necessarily that home, because after a certain amount of time, that home would go into foreclosure because you no longer are on the mortgage. The mortgage has been moved from the lender to HUD to be paid off, and you are just a renter. So unfortunately, you could, after a certain period of time, buy another home, but not necessarily that one. That one would be one of our HUD foreclosed properties that will go to, we sell them online in an auction kind of process. So you would only be a renter for a certain period of time, but you'd have lost your right as a homeowner.
So there's actually two programs in occupied conveyance and the other that you
And
would.
the other one that I thought they were talking about is
Section 8
leasing
housing.
out their property to,
Yeah.
with the Section 8. That's two different things, and now I'm confusing everybody.
No, www.hud.gov. Check that out. There you go. Okay, we tried working with different agencies and they could not help. So we've contacted a law firm. What do you think about law firms helping people?
Is this a law firm for filing bankruptcy, or is it to help you do a loan modification? I mean, I think it's circumstances in your situation. I mean, if you're trying to achieve a loan modification, it may be that you're not having a lot of luck with your lender. The lender, it depends on what it is that you're supplying to the lender and what kind of ultimate decision that they are making. If that is kind of the question, and now if you're, the other one would be if you're contacting a law firm for legal help. I mean, we haven't really talked too much about the option of bankruptcy, and that's kind of more of a last resort type of option, but that could be an option for trying to save a home. And you can explore how that may stop a foreclosure from happening, but that would be legal advice in seeking from an attorney to stop that process.
I would agree. Most attorneys are trying to look out for your best interests, and they may not recommend bankruptcy right away. Hopefully they're going over your finances and seeing if there's alternatives. I mean, there are attorneys that it's more of a treadmill. The more they get in, the more they get out, and the more fees they make. So you go in and they may just recommend go Chapter 13 right away. And, but again, it's attorney by attorney, and they can help.
The concern I have is, of course, they do have fees, and here you're kind of getting into more debt. I do have a phone number, and the Supreme Court of Arizona has a group. It's called Arizona Lawyers Helping Homeowners, and that's another number, 602-258-3434, or you can go to their website, www.azlawhelp.org. That is also on the sheet out there, and if I need to repeat that, I can do that again. But I first heard about them. They did, the representative for this organization spoke before 2 congressmen about how they were assisting. And of course, they're not going to help every single homeowner, but they do go through a criteria, and if they find that they can help you, then, but call them and you can find that out. And there is no charge.
Where do I go to see someone with the local authority on housing for both cities of Avondale and Goodyear?
Well, I don't have the phone numbers with me, but you can go to www.hud.gov. If you, I can get that information to somebody here later, but I think Goodyear, you would know, and Avondale, there is a housing department as well. I think you can find that probably in the white pages or blue pages.
I'm going to give you our phone number in our office if you would give us a call, and we'll put you in touch with Avondale and the folks that are helping our citizens in Goodyear. Our number is 623-882-7810, and that's actually directly to my desk, and I'll be happy to transfer you over. Sure. 623-882-7810. Sure. Avondale does have a housing authority, or excuse me, a housing division. We don't have that. Yes, ma'am.
Let people know my business card is on our computer.
Thank you. Linda Dillard, she is our community advocate, and she will, her business card is out on the table, and please pick that up. It'll give you another number in our office. She knows a lot more, actually, than I do, so call her.
I know how that is.
Yeah. Okay, we've got a couple more questions here. I was on disability for a couple of years and fell behind a couple of times, but was always able to catch up with payments. I've fallen behind again, and now the creditors will not work with me on restructuring my loan. Are they required to work with me during these hard times, or can they continue to foreclose on me? I can't make up the past due, but I can make my monthly payment.
They're not required to do it. I'm surprised that if you can make your normal payment that they wouldn't do something like a forbearance. And going through a certified counselor could help with that, and getting them involved, going through the budget process, maybe getting on the phone with them to contact the lender might be what it takes to get some help from them.
I would agree. I mean, I think sometimes pulling up the full payment history, I mean, if it's a couple of payments over a couple of years, that seems pretty extreme. Being able to communicate the circumstances, disability is a fixed income, that's an extreme situation as well. That's fully documentable, I guess, if that's a word. And being able to get assistance, again, sometimes lenders play nicer when we're on the phone. And being able to really go through your budget and document everything and explain why it is that you've been able to get, or get behind during those periods of time may make a difference. So.
Okay. I cannot be refinanced because my home is worth less than it used to be. This is based on what my lender has said. My loan is conventional. Would I qualify for FHA or HUD or Fannie Mae?
Well, I'd need to know more circumstances. Possibly, yes. We do have a program that allows for us to work with the current lender to forgive part of the, in fact, they can come in and they will get less than, but I'm wondering how much you're upside down. And so all of those things have to be considered. We do have some programs. Unfortunately, they're voluntary, and the lenders have not run to participate in them. We're hoping with this new stimulus package that we might see some more incentives or because there are so many foreclosures that they would use FHA product to be able to convert people who are either in default or they owe more on their mortgage than what the house is worth. All of those could be worked out. We said that, for instance, in the Hope for Homeowners, if the individual lender would take less, essentially, and also if they wanted to have a second that would be forgivable later, so they would hold on to that, so that waiting out the market, so to speak. Also, individuals would share in the equity if the housing would increase. All of those things are part of the program, but like I said, we've had very, very few lenders that have wanted to participate in that. So there's products out there, but I guess they're waiting for another bailout, I guess is what they're considering. So it really depends. A lot of different circumstances. I'd have to know more, but from what you're asking, that's what I know lenders will and will not do at this point in time.
Lenders in this program, lenders were being asked to write down their balance to 90% of current value. And to the lender, I think they're thinking, if I have to write it down that far, what's the difference of doing that or foreclose on it? I'm going to get roughly the same amount of money anyway. So they're looking for more of an incentive to do that.
Okay, we have a couple of questions that are very similar, so I'm going to try and roll them into kind of one area here. What are the options when you want to refinance when your house is not worth what you bought it for? I think that's kind of right along what we just said.
Right.
Mm-hmm. I've lost $100,000 of value in my home from when I purchased it less than 2 years ago. Would it be smarter to walk away from the house? I'm not behind at this point in time, but not sure how long I can take this. Would it be smarter to cut my losses now and walk away or ride out the market?
Well, I think I said earlier I would try to continue to make my payments as long as you're able to. You didn't say that you had a different set of circumstances. I think what people are so anxious about is that the market has plummeted as much. But as you know, if you've lived in Arizona at all for any period of time, it does swing back. It may not swing back as much, but the other thing that I always say is that you have to have some place to live. So if you can afford your current payment, stay in your house, stay in your neighborhood. That has a lot of benefit to whole neighborhoods, and but you have the option to do whatever you want, and I say last resort, walk away.
Well, $100,000 is a lot of money, but if you think over the, if you're 80 years old, this might not matter, but for most of us, 30, 40 years old, you're going to live another 30, 40 years. You're going to need credit. You're going to need auto loans. You're going to need insurance. The estimate is if your credit score is below a certain level, that over your lifetime, it'll cost you hundreds of thousands of dollars. I think I saw one on the average person is like $400,000. Because when you do get a mortgage loan again, it's probably going to be 1 or 2% higher than you could if you had excellent credit. You're going to pay more on your auto insurance, probably your homeowner's insurance, your car loans, your credit cards, just about everything that relates to credit you're going to pay more for. So you save initially on that $100,000 and more than pay that back over your lifetime.
I think this is a very difficult question, and yet it's a very common question. I mean, I've been presented with this very same situation multiple times in the recent weeks and months, and ultimately it's a difficult question to ask yourselves. And what I would challenge you to do is to gather all of the information to make the best decision for yourself, for your family, to know all the pros and cons of the options that you have. I mean, there are so many factors that come into making that kind of a decision. Everything that Bob had just mentioned. I mean, there are employment types of decisions that factor into that. Commutes, the costs of gas to get back and forth. I mean, credits and the like. And so, factor everything into that decision. Talk with your family members. Share those decisions with people that you trust. Gather those facts. Don't make rash decisions. Don't make them under duress. That's what we're here for. And, gather those resources. And at the end of the day, you have to be comfortable with the decision that you make. We don't know. I think even the experts don't know. Realtors, go and talk to realtors. Know what the market is going to do in 3 months, 6 months, a year from now, 2 years from now, 5 years from now. But maybe get their take on it as well to see if it's going to rebound or not to rebound. And once you've gathered all of that information, then you can make your best well-informed and educated decision and then go from there.
The good news is we're not Detroit, and Phoenix is still growing. So there's a lot of people moving into Maricopa County. They're not fleeing the state. They're not fleeing Maricopa County. So over time, it's just a matter of supply and demand right now. There is excess supply, and that has to get eaten up, and that's going to take some time. But at least the county is growing, and more homes will sell.
Here's a multifaceted question. I can afford my mortgage, but not my home equity line on my rental. On my mortgage, I need a lower payment because I'm using my credit, and I'm assuming this is credit cards, for other expenses, and I owe more money than I am able to work with. So I can afford my mortgage, but the home equity on my rental I cannot make.
Probably a lot of different factors in there to consider. Things like, what are your minimum payments on the credit cards, I think you had mentioned. The home equity line of credit with the rental unit, how much you're charging for rent on that unit. It may not be the actual mortgage payment on your primary. I mean, that does need to be your primary concern because that's where you're living. There's definitely some pros and cons there that you have to weigh out. What are the equity positions within your primary house and the investment property, and your overall budget? I think it's a complex situation, something that we see all the time, and we have to kind of see some more details to be able to kind of break down what those different options are, what are the resources that you have, and to be able to help you, guide you in managing out what would be good solutions for you to choose, and what the maybe the credit impacts would be or whatnot. I don't know if you have additional comments there.
Don't know enough.
Okay. A couple of questions about Fannie Mae and Freddie Mac. Could you tell us what's the difference?
Well, they're both, what do they call them now? I call them quasi-government agencies.
Yeah, government, GSEs.
GSEs,
government
sponsored entities.
Yeah.
And although I don't know that they're GSEs so much anymore, is really controlled totally by the government, there's really no difference. They're just, what would you call them, clearing houses, investment houses. They retain a lot of the mortgages. So typically if you fund your loan through, in fact, we even sell some of our loans at Fannie Mae. So for our case, we choose to go through Fannie Mae. There's also Freddie Mac. We go through Fannie Mae, who underwrites the loan, and then we sell it to Fannie Mae. We retain all of our servicing, so to our member, it's completely transparent. If they have a question on their mortgage, they contact us. If there's any problems, they contact us, or our servicer, I should say. But Fannie and Freddie really act identical. It just happens to be that the government didn't want one super mega GSE, and in fact, there's some debate that when Fannie first got into trouble, they thought about splitting the two into multiple and have just a bunch of small GSEs, and then they leaned back toward making it one giant one again. So I don't know that anybody has an answer on that.
Okay.
They refer to it as a secondary market, and the idea behind the secondary market was to allow for the capital for the lenders. The lenders are the ones that loan you their dollars, and they want to continue to do that. So what they do is they sell the paper or the mortgage to Fannie and Freddie, and then they'll replenish those dollars so that they can loan more money out. And that was that's why they call it the secondary market.
Yep, exactly.
Okay. A deed in lieu. does the owner still own the mortgage balance? And is there a severe negative impact to credit?
No, if it's the first mortgage again, that's not collectible. Second mortgage, as we talked about, well, a deed in lieu, well, no, on the first mortgage, you're usually doing the deed in lieu to the first. The second could have some ramifications. You need to speak to an attorney on that. What was the second part?
Is there a severe negative impact to your credit?
There will be an impact, and it will be negative. The FICO score, you hear that all the time. A lot goes into the FICO score, and FICO is its own company, and they sell the score to the major credit bureaus, Experian, Equifax, TransUnion, and they keep it a mystery as far as what goes into it. But if you do a deed in lieu, and let's say you only have 2 pieces of credit, it's going to have a huge negative effect. If you have a pretty deep credit file and everything's always been paid on time, and you've had 3 mortgages in the past that were always paid on time, it's definitely going to have a negative impact, but not to the extent that it would.
I think it can depend on also the position of or the value of your home. I mean, if the value of the home is exactly what you owe on the mortgage and you just can't get a buyer for it, then you may want to talk with the lender and see how they're going to report it. If they just accept the deed of the property back and they accept responsibility to sell it, then they may just report it on the credit as, settled or paid for.
Yeah.
Okay, but I mean, if you're underwater, say $25,000, then that could have definitely a negative impact on your credit, right? Because you still owe $25,000, or it's maybe they're forgiving that $25,000, so it could have a negative impact to your credit, not nearly as much as, say, a short sale or a foreclosure. I don't know if that makes sense, but
And the FICO score, FICO isn't a score that indicates the likelihood that you're going to default. It actually, the score itself is an indicator of whether or not you will go delinquent on any loan within the next 24 months. So it's really looking a lot at your payment history. So if your payment history on all your other debts is absolutely perfect, it'll have an impact, but it may not drop your credit score 200 points.
Okay. You just said something underwater, and we have a question on that.
Okay.
Are there programs being considered to reduce principal on property underwater? Might need to say what underwater is.
Well, underwater is when you owe more than what your home is worth. There's one controversial one being kicked around in Congress right now, and it's called cram down. And that would be a revision in the Chapter 13 bankruptcy code. Right now, if you go Chapter 13, the trustee, the court, cannot lower your principal balance on your first mortgage. They can do it on an auto loan. If your car is worth $10,000 and you owe $20,000, they can make that $10,000 unsecured, and it gets repaid through the unsecured portion. They can't do that on a mortgage. So if your house is worth $200,000 and you owe $400,000, and you go Chapter 13, you still have to repay that $400,000. So right now, Congress is kicking around potential changes to the bankruptcy code, but there's a lot of arguments back and forth on that one.
technically the Hope for Homeowners would also be something that could address a house that was upside down or underwater where, you owe more than what it's worth. I mean, that could be a program. Again, it gets back to the voluntary, type program if the bank were to agree to it, but it just hasn't been very effective. So.
Right.
And if you do owe a lot more than your home is worth, then this law were to get passed, it's not a given that you can just file 13 and have your debt written down. I mean, when you go to Chapter 13, you have to prove it's a hardship, and you have to prove that you couldn't afford your debt to begin with. So it's not a given that. So if you can afford your home, going Chapter 13 wouldn't be an option.
Earlier in the evening, we talked about 38% of our income regarding I think a refinance. Was that?
Well, for more of a modification, the lender is trying to get your payment down to 38% of your gross income.
Right.
And so when they're trying to do a modification, they're trying to adjust the loan, kind of tweak it in different ways by adjusting the term, the rate, the balance to get you to that 38%.
And if you were current on your mortgage and the interest is reasonable, is a modification worth pursuing?
So if you're current,
On the mortgage
On the
and
mortgage.
interest. And the interest is reasonable, should they be looking for a modification?
only if you can't afford the payment. So the rate still could be a good rate and you can't afford the payment, then you would want to pursue a modification. Again, it's probably going to be more difficult with some of the lenders if you're current, because they're still telling a lot of people, some lenders are, that you have to be delinquent. But some aren't. I mean, we'll work with our members. If we know that, I mean, suddenly you become unemployed and you're current on your loan, the odds are you're in a hardship right now. So we're going to look at doing something for you.
Are there lenders currently willing to refinance or by combining a first and second mortgage? In this case, the first mortgage is interest only.
If there's equity, but there has to be equity. Another company to refinance and combine the first and the second into one wouldn't want to do it if they're taking on extra exposure. So now the first mortgage company, they might refinance to give you better terms, but typically, well, there's some laws that go with it. Typically, they won't refinance when there's a second lien behind it, unless they can pay that second lien off. But there really has to be equity in the home for that to work out.
Okay, the bank who owns the foreclosures in our neighborhood have reduced the sale prices on a number of homes. And they've reduced them by hundreds of thousands of dollars. I cannot compete with this foreclosure-priced homes. How do I qualify for a step-down sale? How would this affect my future income and credit? I cannot afford my home.
Yeah, it would be working with the lender on a short sale price. And typically what you'll do is you'll get a broker or a realtor to come out and they'll do an assessment of what the value is. They'll put together what are listings in the neighborhood right now, and you'll go to your lender and you'll just show them, here's identical homes. They're 2 blocks away from me. They're selling for $180,000. That's what they're listed for. I owe you $320. There's no way I can list my home to pay it off. So you and the lender work out a plan where they agree to a listing price with your agent.
Mm-hmm. And I think the key to that was that you said you couldn't afford your payment any longer. So
Correct.
What recourse do I have as a homeowner when my HOA fee has increased without my knowledge? I pay every 3 months and have never missed a payment, but now have a balance of over $400. I'm budgeted only for the fee that was set when I first purchased my home. I don't know what to do. How can I help myself? Also, I bought my home 2 years ago for $256,000, and now it's worth $170,000, and my payments are raising. What can I do?
Well, as far as the payments going up, really everything we talked about, which is utilizing a HUD-approved counselor and contacting your lender and trying to work out some type of modification. With the HOA, there's a lot of laws that govern that, and the laws have changed a lot in the last 2 years. I mean, typically HOA boards do have the right to modify the dues, but I know there's an advocacy group in Maricopa County, so not sure who to contact.
We
You
can
know,
have them call
probably-
our office again, I think, on this, and we do have some connections with
Okay.
HOAs and to help out.
yeah, I would think maybe even the Attorney General's office would have
Right. So if you would
jurisdiction.
pick up our card in the front, on the front, Linda Dillard's card, we'll be happy to help you out with that. Okay, we're winding down here. We just have a couple of more to go, all right? So everybody, bear with us here. I hope is this being helpful? It's good? Great, okay. I have a brand new home bought in 2006 for $300,000 on ARM, paying interest only. The value of the home to date is $177,000. The payment is still current, hoping for help without foreclosure. What's the option? We're informed modification is an option due to mortgage is not yet foreclosed. And the other point made here is cannot refinance unless the difference we paid between the $300,000 and now the $177,000 can't refinance. Oh, they can't refinance $123,000 is what they're saying. If you could explain more about the short sale and deed in lieu. So,
So I guess the concern would be the affordability. The one concern may be the adjustable rate. going up in the future. So I don't know if FHA secure might be an option. I mean, if you can continue to afford the mortgage payment as it is now, and you're just concerned about it going up in the future, that may be a program.
Well, FHA secure expired.
It did
unfortunately,
expire?
yes.
Okay, I'm sorry.
That's all right.
So that might be something, again, contacting the mortgage company if you were concerned about it going up, and then they may be more willing to work with you on fixing the rate so that it doesn't go up. But if you're more concerned about just not being able to afford your payment, then you're looking at doing the short sale, potentially hiring a real estate agent, putting the house on the market, seeking buyers, working with your lender about the short sale program, and then looking to relocate, building up reserves to be able to relocate, seeking alternative housing.
Okay. On a short sale, who pays the realtor commission?
It's kind of negotiated between the buyer and the seller, typically the seller.
Yeah, the seller.
And how long does a short sale take, the process?
Actually, I was reading about that a few months ago. I mean, it was horrible, and it's still not good. But the Hope Now lenders got together, and I think they committed to,
that as long as everyone is participating. We didn't get into this all, the government by themselves. So the lenders are going to have to take a little less, the homeowner a little bit less, those kinds of things. And we haven't had it seems to me that we have the perfect storm. But the other thing that has happened, unfortunately, is that the prices have gone down as well. So people are still very unsure if they want to, meaning the lenders unsure if they want to participate in some of these programs. And we're hoping that's going to change. We know the Hope Alliance, which is Bob mentioned and I've mentioned as well. This is a consortia of lenders who have signed on and said, they're going to help these homeowners. They have a Hope line. They are doing what they can. It includes Chase and Bank of America. But that doesn't really help for if it's another lender that is not participating. And there are some out there that in Arizona that aren't in that category. But loan modification is, something that we hope that they will take on, because it would, at least if they can modify the loan, keep them in the property, that they don't have to go through the more expensive foreclosure process, assuming that they could bring down the payment so people can afford to live there.
Yeah, actually, I have some old notes regarding the Housing and Economic Recovery Act. I don't know all the provisions in it, but one of them is still in effect, and it doesn't really help the homeowners stay in their house, but it does. It was meant to bolster the housing market to get sales going again. And that one right now is a $7,500 tax credit that individuals can get. So if you are what's considered a new home buyer, that's somebody who hasn't owned a home in the last 3 years, you can qualify for a $7,500 tax credit. That's dollar for dollar you get back on your taxes. Technically, though, you have to repay it over a 15-year period, interest-free. But right now there's a lot of discussion in Congress about making that just a gift, so you never have to repay it. In fact, they're even talking about increasing it to $15,000. And what that would do is just really, hopefully, spur more home buying. And if there's more home buying, that's going to help all of us.
Right. I think most people had hoped that it was going to prevent foreclosures. And unfortunately, the provisions, Congress did not include those kinds of provisions in that particular law. So we had a number of things that happened. Our mortgage limits went up in terms of FHA. The other things that Bob talked about, I'm trying to think, we also have dollars that were provided to communities to buy up some of the foreclosed properties and then make them available to first-time home buyers. But once again, that's not helping necessarily to prevent. It's kind of like the horses left the barn, and that's where the monies were, Congress had assigned the monies to. So we're hoping with this new stimulus that that will change. That will, I think President Obama is concerned about, at least through we have a new secretary at HUD as well, and they're concerned about prevention as well. And I think that's where all of you are. And I think you just need to continue to make your concerns known to your congressman.
Last question. I need to refinance the FHA loan. Is there anything such as a 40-year fixed with 3 or 4%?
3 or 4%, probably not. But there has been an extension to 40 years. We would also, you would probably be put into a Hope for Homeowner program, but we would have to also have the lender participate, and that's the program that we talked about that is at issue at this time. It's voluntary. Many of them don't want to take that loss, even though, to me, it doesn't make sense because they're taking a bigger loss, I would think, going through the foreclosure process. But that's the market, and that's the American way.
Are there any questions that you would like to just offer from the audience that maybe I didn't get a paper on? Yes, ma'am. Could you repeat the question? Would you like for me to repeat? Of the evils, of all the evils related to foreclosure, short sale and deed in lieu.
If you absolutely can't afford the house and you've gone through the counseling, I would start with the short sale. If the short sale doesn't work, keep working with your lender. They'll hopefully let you stay in the house as long as possible while you're trying to do the short sale. And at that point, if the lender says it's just not working, I would encourage a deed in lieu versus forcing the lender to do a foreclosure.
Okay. Any other question? Yes, sir.
I haven't heard a plan. I haven't heard a formula of anything tonight. These people came here to hopefully have someone they can call or to talk to fill out paperwork to refinance their homes so that they can keep them. And I haven't heard that.
Okay, the question is, the statement is that you haven't heard a plan about how to move forward tonight with foreclosure or help people with the situations that we're in.
I haven't heard of anything positive about how a person they don't want to lose their homes. They don't want their homes to go into foreclosure. But there's no plan, there's no formula, there's nobody they can go to keep this from happening.
I completely agree as far as there's no formal plan. I mean, the government has not created anything. There's nothing set in stone. It still comes down to a lot of negotiating. And I was kind of talking about that before we met tonight, is I know what we say tonight is going to sound redundant, and we've been talking about going to the HUD counselor, you go to your lender, and a lot of it is just in their hands. There is nothing, there is no program that can force the lender to do anything.
You should be able, though, to go to the Federal Housing Authority, no matter what kind of loan that you have, and get your home refinanced for more years, for less interest, and be able to keep your home.
Well, unfortunately, we have to, Congress decides what kind of programs HUD can administer or FHA can administer. The reason why, and that was very much talked about, that the government or FHA would take over all of these, what they call toxic loans. But Congress and some of the regulators they would not allow that because insurance premiums One of the things that HUD or FHA had asked for is that let's have a staggered insurance premium, which is required when you get a mortgage from us, so that we are charging someone who is at higher risk, higher amount than we would someone who has lower. They said no, and so then we ended up saying, okay, we're going to, in order to take on this very volatile group of loans, we will have to raise our insurance premiums to across the board to everyone that comes through. The concern there is that Congress didn't agree with that, and we're only the administering agency. We are following the guidance of Congress, and that's why I say these kinds of concerns need to be sent to your congresspeople, phone calls, emails, letters, indicating that very thing. I mean, prevention is a real issue. Prevention of foreclosure is a real issue, and most of the plans, so to speak, have been voluntary, and they aren't working.
I think it's getting closer to having some decision made, though, that would be more of a program. I know that, I'm not sure what her name is, but she's the head of the FDIC. One of the models they look at is when the FDIC had to go in and take over IndyMac. Does everybody remember that a year and a half ago? IndyMac had a lot of problems with their mortgages, and the FDIC set up a program to refinance them by cutting down the principal and doing it at like a 4% rate or something like that. And a lot of congressmen and women have been looking at it as a potential model for what to do. But right now, there is no model, there's nothing set in stone on how to help homeowners, which is why there's a lot of uproar with the banks getting the huge bailouts that they are, and homeowners are getting no help.
I would also encourage the folks that are still here that we have a couple of financial programs coming up in the next few weeks. That flyer is out front, and please do check that out too. You may want to come. It's right along the lines of what we're talking about tonight on a more personal level as well. I think there was a hand in the back. Yes, ma'am. The question is, what's the most effective way to contact your congressman or congresswoman?
Email, phone. You can always send them an email, phone, a letter.
You just Google their name, and it'll bring up their Senate or Congress website. You go on there, and they'll have a link for emailing, and you have to click topics, et cetera, et cetera. I've done that a few times.
If I can make one just quick comment too, and I would agree. I mean, there's no one quick, hard, fast rule or solution on anybody's particular situation. There's no one program that's going to be an answer, but just kind of speaking from the front lines, talking with folks like yourself every day. I mean, I do multiple appointments each day, week in, week out. I mean, I have seen success stories. We have been able to work with folks like yourself and talk with lenders, put together programs that do come out with a positive outcome. That is a workable solution, a loan modification, a change in the terms of your mortgage that results in potentially a reduction in your payment or your interest rate. It does resemble a refinance in a lot of situations. So, I want to leave you with that, hope that, there is no one easy, fast answer, but it's going to be up to each and every one of you to decide, what are your circumstances? How do you want to move forward? And then find out what those, what is your lender going to be willing to do to work with you? What kind of changes are possible and moving forward. And I think that we can all rest assured that there are opportunities out there, and we are here to help. That's why we're here this evening, to be able to go through a lot of the questions that you have, to go through the different facts and information that are there, so that we can all make well-informed decisions.
I think if you see the government create this mega bank to take in troubled mortgages, you're going to see programs like the FDIC did with IndyMac, where the government's going to start modifying the loans. That's my opinion. I think that's one of the purposes of why they would take over all the troubled mortgages.
I think, and I've said this before, there was hopes when the money, the bailout went, and that they were hopeful that the lenders were going to continue to loan money. They were going to go ahead and modify. That didn't happen. And so now they're looking at other things, and he's absolutely right. FDIC, even remember, some of you remember the Resolution Trust organization as well, that took all the loans in, and that was a government agency that then modified them all or sold some of them, had some set aside for affordable. All of those things can be done, but the vehicle to do that has to be approved by Congress and for the government to do it. So that's why I'm just kind of saying, yes, talk to a housing counselor. Don't be intimidated when the lender or the servicer says no right away. Talk to someone who you trust. Talk to a housing counselor. Send your concerns to your congressmen and women. And I think in the short, things will begin to change, and you'll hear many more success stories. I've heard more in terms of success stories than what I heard maybe 6 months ago. So I would just say keep trying. Yeah.
Especially in just the past few months, definitely a change. So.
We want to really encourage you to take advantage of the free counseling that we have available. If you don't take anything home from tonight, know that it's free. You must see a HUD counselor. Don't go anywhere else. We can't stress that enough. We have the opportunity for you to get 1 hour right now of counseling for yourself, one-on-one. Please fill out the paperwork. Credit Union West and this fine group of folks up here, I'd really appreciate Rebecca, Bob, and Dan helping us out. It's been fantastic. But, you know, take that home with you tonight. Please know that you've got another personal hour coming to you. Thank you very much. Credit Union West, we really do. Rosie Hardenberger, we really appreciate this from you, and also from Janet Humphrey. She was the woman who coordinated this tonight. I know that if Mayor Kavanaugh was here and other members of council, that they would say to you that they really mean this. If we can be of assistance to you with the City of Goodyear, we care about our residents. Let us know, fill out a request, give me a phone call, let us know what your needs are, and we will do our best to have other folks come in and counsel you and work with you. Thank you very much for being here.
Thank you.